Well, he's taking the long-term view, which is nice. 2082. So that's a great setup for the foreign direct investment panel. Ahmad, where's Ahmad? Are you ready? Ahmad Zoeter, who is a founder and managing partner of Jadara Capital Partners, which has been working in frontier assets for 20 years. He previously, before founding Jadara Capital in 2012, worked at Soros Management and Morgan Stanley and Scudder Kemper Investments. So please, panelists, take your seats. And I don't know how many we have here. Do we have anyone else? Jonathan Lacey, yes, he's not here. Okay, so we'll try to keep this panel a little bit shorter than the last one if we can. So thank you. You have your mics up attached, or you can hold them, or?
That's right. Put essentially a bit of a boundary around the topics of discussion, and then open up for everyone to make their own statements, but also within that framework of dialogue. Very, very quick introductions for the three panelists and myself, and obviously, please feel free to refer back to the literature for a full biography on all of the panelists. To my right, Mr. Aminul Islam, Executive Chairman of the Bangladesh Investment Development Authority, BIDA, and has spent a significant amount of time both in the public sector as well as with multilateral institutions like the World Bank, and is obviously a leading expert on how the government can help unlock the potential for foreign direct investment in countries like Bangladesh. To my left, Mr. Khalid Qadir, founding managing partner of Brummer and Partners. Khalid is a pioneer in the private equity space, launched the first private equity fund in Bangladesh, and has been doing this for essentially 25 years. And I've known Khalid for several years. We collaborated together on a conference that we held in London last year. And then to my right, Mr. Sharif Zahir, the Managing Director of the Ananta Group, leading apparel manufacturer and player in the RMG sector. And I think we can get some fantastic insights from him from the perspective of an investee company in a leading sector in Bangladesh. So I think a pretty well-represented panel. We have the investor, the public sector, and investee company. And just very briefly on myself, I'm an investment professional. I've been investing in frontier markets and emerging markets for the last 25 years. We tend to be concentrated on half a dozen countries, and Bangladesh is one of the countries that we focused on in the last decade. Hopefully we'll have enough time. I wanted to try and get to four main areas. One, ask the question, why hasn't FDI taken off in Bangladesh? Why isn't it at the level of Vietnam, or even that of Sri Lanka, or a Myanmar for that matter? Two, so I want to look at really the shortcomings, the structural shortcomings and the challenges first. Second, look at success stories. How and why have they overcome these formidable challenges, and what can we learn from their success story? Three, hone in a bit on the private equity fund model and try and understand what they've done right, what they've done wrong, and what are the challenges that they've faced in unlocking the investment potential in that through that channel specifically. And then fourth, focus on the capital markets and understand a bit more what the equity market has done, how it's evolved, and why the debt markets in particular have not flourished in Bangladesh. So let me just frame the first topic very quickly. So despite stable and robust multi-decade reform economic growth, and we've heard from the previous panel and several speakers of how robust that economic growth has been, Bangladesh has had a strong and stable currency, has had a number of various investment incentives, the last of which is the Industrial Policy Act of 2016. Strong comparative advantages, we've heard in other panels, in labor costs and demographics, and one of the highest returns on invested capital achieved in the private sector. And that, I'm saying, across all countries that we look at. I would even put Bangladesh ahead of countries like Pakistan and India in Southern Asia. Unfortunately, Bangladesh has not attracted a large amount of FDI over the last 20 years. And I'll give some sort of negative statistics just to be a bit of an antagonist here and be a bit provocative. FDI net inflows as a percentage of GDP have risen from 0.38% of GDP in 98 to just above 1% in 2016, according to the World Bank. Peak FDI reached about 1.7% in 2013, but has steadily dropped since 2013 up until last year. And it's underperformed most of the country's South Asian peers, with the exception of Pakistan. So countries like India are running at around 2%, Myanmar 5%, Vietnam at 6%, Sri Lanka at 1.1%. And then if you look at aggregates, low and middle income countries are above 2%. So Bangladesh, on that metric, is very much punching under its weight. It also continues to rank poorly on various competitiveness benchmarks. So it's 145th out of 176 countries on the Corruption Perception Index, 176 out of 190 on the World Bank Ease of Doing Business Index, and 117 out of 128 on the Global Innovation Index. And if you look at most of the economic commentators, they point to the FDI's sort of bad performance as a leading contributor to Bangladesh not being able to fulfill a productivity-driven growth engine, which is something that really hasn't provided a lot of growth to a very high headline growth rate. So my question to the panelists, and maybe we start with Khaled, is what are the structural reasons behind this poor performance? There are a number of, there's a whole laundry list of reasons that economists point to. I won't mention them here, but I would maybe highlight a couple that I think are big culprits. One, the limited domestic financing capabilities in the country, the legal and judicial shortcomings vis-a-vis the rule of law, corruption, which we hear quite a bit, and then to the economists from Harvard who spoke earlier, the concentration not just on sectors like RMG, but also on trading partners or sources of investment capital. So maybe start with Khaled and get his prognosis on this.
Thank you, Amar. Just to start with, I'm somebody who manages fund and invest in Bangladesh. I go around the world and pitch for Bangladesh and raise capital, which in turn we invest in companies in Bangladesh, in businesses. And one thing becomes very clear that very few people actually know this fantastic growth story that we have. And many investment forums I have attended or gone or talked to investors, it's very common that most people, Bangladesh is not on their radar screen. So I think that is one of the fundamental problems that we have as a country. And event like this is very critical to spread the story, what Bangladesh is fantastic growth story. Not only growth, but what we have is a very predictable growth. For the last 20 plus years, we have been growing anywhere between 5 to 7%. And in very few countries, almost non-existent, where you will have this kind of predictable growth. You know. So I think we need to do more of this. You know, we need to promote the country the way country to investors. Country is just like another product. You know, because see, FDI is not only the frontier market or emerging market seeking. Even America seeks FDI. You know, so we are competing with another hundreds of countries. You know, so we have to design our pitch in such a way that the investors understand what we are offering. I think so. One is the marketing aspect. You know, also all the good stories about Bangladesh. You know, we have this predictable growth. We have our GDP per capita has quadrupled only in the last 6-7 years. Our foreign exchange reserve is almost 7 months of import. This is a very, very good story. At the same time, we have not yet attracted the private risk capital. I mean, FDI we can divide into public investment, for example, bilateral loan or credit facilities. But the risk capital that we, the Frontier Fund, we invest in Bangladesh is a different type. You know, we take our own risk when we analyze our investment. We don't take any sovereign guarantee of our return. So this is very important to promote this sort of investment. And yes, as a country, we are reforming our FDI or some of the regulatory issues, but our regulators, our policymakers need to look much deeper. Is there a structural issue that even with so many good points and stories about Bangladesh, why are we not attractive? So one is the marketing and also some regulatory affairs that we have to, there are some changes that are taking place, but hopefully we can speed up that process.
Would you like to comment a bit maybe on some of the public sector points and what can the government do to really help facilitate this re-rating and foreign direct investment in Bangladesh?
Thank you. As you heard from the keynote speaker, the issue is financing development. And if you look back, you know, when Bangladesh was an LDC, there were commitment from the global community that some percentage of resources will be made available for the development. That never materialized. And during the last 2 decades, a lot of things have happened in the international arena. Now we have a totally new agenda for development. And this agenda is enormous related to what we had, if we compare the SDG with the MDG. So how to finance development? And in this financing scheme, the foreign direct investment features more prominently. And we are interested in FDI because it brings in knowledge, it brings in technology, it brings in best practices, and also potential to improve the domestic economy. If you look at the FDI trend in Bangladesh, at the early stage, you see there was predominance of state-owned enterprises, economy was small, no wonder, you know, there was very little appetite for foreign direct investment. And in fact, political and economic instability had it's a big adverse impact. Until 1995, FDI inflow into Bangladesh was less than 100 million a year, which is very low. It picked up after the elected government came to power, went beyond $500 million, and then again with the change of the government, it came down. Once again, it picked up after 2010. So clearly indicates that the political and economic stability is a factor in FDI attraction in Bangladesh. However, as you have said, mentioned about Vietnam and Myanmar, why Myanmar attracts more FDI than Bangladesh? This is something you have to explain and tell us. This is a country where you see ethnic cleansing. This is a country where you see massacre. This is a country where there's very little infrastructure relative to what other countries have in the region. Still, FDI is flowing in such a great amount. Why is that? I don't have much explanation. I would like to hear from you. However, when you talk about inflow of FDI into Vietnam, well, that sounds very rational and reasonable. We made a study of what's the difference between Bangladesh and Myanmar. In fact, there are a lot of areas in which Bangladesh and Vietnam is similar in population. Its structure is more or less same. In terms of location, they are in strategic location, as we are. Even we are in a better location. However, there are three areas in which Vietnam differs from Bangladesh. One is very regulatory regime. It's a kind of framework under which the businesses operate all around the world. If you look at the legal regime in Vietnam, they have made lots of improvements. Whereas in Bangladesh, a number of laws and acts of narrow focus regulates investment. They have wider focused laws, all-encompassing laws. The latest one, investment law and enterprise law. Some people say that enterprise law makes a regime in Vietnam which is even more liberal than the regime that you have in the United States. So that's something has to be tested. However, so we have to make improvements so far as the legal regime is concerned, regulatory regime is concerned. Secondly, infrastructure. It's very much known to all that Bangladesh has infrastructure deficit, and that is why we have taken up lots of mega projects in roads, in ports, in power, in energy. All these are coming up. This is in the process. So we have infrastructure deficit. We are dealing with it. And the third, which is equally and even, I would say, more important, that is skill. And more than 2/3 of the investors in Vietnam have said that we are coming to Vietnam primarily because of the availability of skill and the cluster facility for developing an industry. So these are the three areas that we are working on. And I believe these are the deficits that Bangladesh has. However, there are other factors as well, probably we could keep more focus on. For example, having an integrated policy. Rather than spreading all our effort, thinly all around the country, we can focus on particular countries, particular sectors, particular areas, maybe particular investors. For example, Samsung came to Bangladesh. We wish you could cash in, that sort of investment opportunities. So focused attention with strategic approach, I think can help Bangladesh better. And secondly, you see, when we go for investment promotion, in fact, we focus on promotion rather than on facilitation. Because for an investor, facilitation, as the investors say, is more important than promotion. So that is an aspect on which we are focusing more. And investing experience is ultimate. Whatever we say that this is what we offer, ultimately, what is the experience that investors have? You heard that Bangladesh has enacted One-Stop Service Act, under which we'd like to provide services that the investors need seamlessly. This will be an internet-based system, and investors will not need to go to any government agency. They can access all those facilities from the comfort of their home. That's the kind of system that we are putting in place in the very near future, on which BESA is working. You will hear from Beza representative here. So improving the investor experience is something probably will help Bangladesh. There are some other areas as well. We can talk about that later. So I'll stop here. Thank you so much.
That's fantastic, and gives a really good, I think, overview of what the government's trying to do. I want to circle back to a couple of points, particularly in sort of facilitating cluster formation, which I think is very important. But maybe shift to topic number 2, which are success stories in Bangladesh, because I think there's a lot to learn from success stories and how they've overcome adversity, to use one of Iqbal Qadir's quotes. And maybe I'll take 1 minute, and we got really excited about Bangladesh when in 2008 we read the Harvard Business School case on how Grameen Phone sort of took form, and the lengthy period of time and all of the insurmountable obstacles that they had to overcome at the government level, at the sector level, and even at the very micro level. And that was very inspiring. But I mean, if you read through that case and really focus on many of these obstacles, a lot of them didn't necessarily have to exist at the time. And one would think in the decade that's passed, many of these would have been addressed. So I'll leave that out there. I think it's a fantastic case to read, because it really shows you what a great entrepreneur can do in overcoming a lot of these seemingly insurmountable obstacles. But what if Sharif, tell us a bit about Ananta, how you've overcome obstacles, whether they're structural or sectoral in nature. And what's the attitude of the foreign investor when they look at potentially investing in RMG sector or in Ananta?
So I'll talk from a very micro point of view. I think whether it's FDI into a country from individual investors or at a bigger scale, it really comes down to the comfort level of the investor. So first is the branding of the country. Of course, we're not very well known to the investment community. But when it comes down to the actual interest, and when they actually come into the Bangladesh, then it comes to the ease of being able to invest into the country. So from a personal point of view, being from the RMG sector, I can share my experience. So back in 2010-11, that was the first time we came across the first PE farm, which is represented by Khaled here, Brahma and Partners. So when they came into Bangladesh, the first idea was they're not going to invest in RMG as usual. They're going to see into other infrastructure projects or pharmaceutical or other industries. Why? Because there is no formal structure of the RMG sector. So we were one of the first private companies who actually had a holding structure and who were able to convince them to come and invest in Bangladesh. Back in those days, we were employing 1,500 people. And with a small help of equity injection, we actually grew the company by almost 25 to 30% year on. So today the company is employing over 25,000 people across different product categories within the RMG sector. I think the story has been phenomenal. The growth has been quite successful. It kind of represents the industry. The industry itself, the RMG industry has grown by 18 to 20% year on. So we just stayed above the curve. So again, why we were able to do that is to build up the trust of the investor. Along the process, I was able to bring in a couple of investors. One was a Romanian, actually, a British investor where we invested in a new product category for Bangladesh. It was men's structured suits. Again, it came to a very personal level. Of course, he knew about Bangladesh, the potentials, the labor costs, and everything. But then the confidence of actually coming into a country and investing was not there, actually. So it came to a personal level where we actually had to go and convince him, spent a lot of time with him, and we were able to bring him into the country. So today, after 7 years, we are proudly, we're proud to say that we've grown one of the biggest suit factories in the region. And my partner is extremely happy, and he's ready to invest into other sectors. Similarly, we got in a person called Mr. Martin Trust. He's a fellow from MIT. He was one of the first ones to actually invest in China back in the early 70s. That was a revolution where actually the entire apparel sourcing started from the East. So this person was very late to come into Bangladesh. Again, the interest level was not there. So he actually invested in Sri Lanka back in the 80s, and he completely handheld two companies, the Brandix and the MS Group. Today, both these companies one is a $2 billion company, the other one is a $1 billion company. So we got him into the picture a little bit late in the game, but he was there. He invested in Bangladesh. It's been 6-7 years. Again, a very successful story where the companies have grown manifold. So I think as a country, as we want to invite FDIs, we have to make it comfortable for the people. Starting from the travel ease. Do the people want to travel to Bangladesh? That's a big problem. If you look at different sort of FDIs, the retailers all across, they have invested in their offices in Bangladesh, which in turn leads to more and more exports. So again, giving them a comfort zone where their people can come and stay in Bangladesh, feel safe. So those small little things are very important to bring in the investments. I'll share another story. So back in 2011, I signed a joint venture agreement with Uniqlo, the Japanese retailer. And the plan was to invest a pretty hefty amount into Bangladesh for backward integration and the whole garmenting process. Back in those days, the country was not ready. Right then, I was given the task to acquire 65 acres of land. And acquiring land was just impossible at that time. And right then, the gas supply stopped. So this investment actually went to Vietnam, where from the government, actually, they were given big acres of land to set up those industries. So we lost that investment. But today, luckily, I must say that it's in a different position where we're getting a lot of infrastructural support from the government. Today, we have a secured supply of electricity. We have come up with a lot of these industrial zones in the country, which is a structured, planned way to invite investments. We are a $30 billion export country where I think 80% of it is coming from RMG. And there is huge, huge potential. We are just doing the RMG part where we're doing the garmenting part. But if you look at the backward integration, there's possibilities for huge investments in fabrics and textiles. So now for that, you need the infrastructure. You need the land, you need the electricity, the gas, and everything else. So with this new support from the government, and if this continues, I'm very confident that we as a company, as an individual company, we are getting a lot of excitement from our suppliers. From the Chinese suppliers to all over, people from all over who wants to come and invest into Bangladesh. So of course there is support from the government. We as private entrepreneurs, we have to invite them, we have to give them that comfort zone where they will come in and they will be able to invest. We just talked about Myanmar and Vietnam. Why did those investments happen? If you look at it, it's all the Chinese investments. Because they feel comfortable there, going to those countries, right? So I think as we have this infrastructural support and we have entrepreneurs like not only Ananto, there are many other good companies in Bangladesh. I think we are quite confident that we will be able to bring in these investments. Same with the emerging sectors, the BPO. We had a meeting just this week with a company who knows about Bangladesh, but who hasn't really come into Bangladesh. So we had to invite them. And again, huge scopes in BPOs, in IT outsourcing, in electronics. So there are a lot of sectors coming up where I think we need the private and the government initiative to invite the investments.
That's great. That's great. And actually, that's a really good segue to a topic that I wanted to discuss as part of FDI, and you mentioned it, which is intra-regional integration and intra-regional investment and trade flows. South Asia actually has very low intra-regional trade ratios. What can be done to stimulate that? Why isn't there more trade with your neighbors, in particular India, which should be your top source of FDI, and yet it ranks, I think, 5th or 6th on the list. I think the UAE and Saudi Arabia rank higher than India, and yet India accounts for the majority of your border. So maybe I can get comments from the three of you, very brief, and then we can move on to the next topic, because I think it's an important one. Would you like to start?
Yeah. So on a lighter note, probably, you see, South Asian people are long distance runner. And that's why you see our trade relation with the United States is a lot more than the trade relation that we have with the countries in the region. Well, you see, cost of doing business with Brazil is cheaper for relative to doing business within the countries in the region. So this is the list. People, when we talk about the South Asia region, we say this is the least integrated region. I would say this is the region with the highest potential of integration. That is something I think politicians and others have to, take very seriously. And that's happening because you see, connectivity is a big factor. And there has been substantial improvement in connectivity, especially between Bangladesh and India. And in the very near future, we'll improve connectivity with other countries in the region as well. With, we are getting involved with countries like Nepal and Bhutan in terms of trade. And we are also connecting Bangladesh to India, Myanmar, and China through a regional economic corridor. I think once those connectivity improves, there is potential for improving integration and definitely improving trade and investment relation. However, as I said, I mean, you see, we have been doing the right thing. We have liberalized our regime. We are more liberalized than many of the countries in the region. We have provided fiscal and non-fiscal incentive. We are developing institutions. We are, creating, skills in the country, and in order to attract FDI. And at the same time, one of the area in which we have given focused attention is business climate in general. Business climate is a all-pervasive thing. It includes policies in taxation, policies in all different areas. So we are working on that. And in terms of doing business, Bangladesh is still almost at the rock bottom, 77 out of 189 countries. But if you consider that point and relate it to the development and growth achievement that this country has, so this country has posted 7.28% of growth, despite this situation in ease of doing business. What if we address all those? And what would be the natural rate of growth for Bangladesh? I believe that would be 2-digit. That's what we are pursuing. And as I said, so long we have been lamenting, saying that, well, we are not getting, FDI as much as we should have, and given the potential of the economy in order to absorb, FDI, this amount of FDI that we are getting is much lower. No more. You see, this year we had $11 billion FDI registered with BIDA, and I believe with BEZA, the figure is even higher. And inadequacy of land is no more an issue. Supply of electricity, in terms of quantity, is not an issue. In terms of reliability, is still an issue, but that's being addressed. In terms of energy, gas is flowing to the grid, national grid. One, LNG terminal is still in operation. The other one is coming very soon. And government has taken up a big program for skill development into the country. So when all these infrastructure issues are, taken care of, and as I said, that we are also working on improvement of the legal and regulatory regime, improving the business climate. We have taken massive reforms initiative in order to improve business climate. So
many of these bottlenecks that we mentioned earlier
Exactly.
are being addressed.
They're being addressed, and that's why we'll see in the very near future, as I said. So when we compared Bangladesh's situation with Vietnam, we have seen that these are the areas in which we have deficit, and we are working on it. And I believe in the very near future, because it takes time. In order to develop skill, you need years. Even you can build a power plant much earlier than develop a particular skill.
Yeah.
So that's what we are working, and I believe that in the very near future we'll see its outcome in terms of not only inflow of FDI, but also in terms of more investment from the local investor, because we know the challenge. It is not that we are fighting for fund from outside. We are also fighting to keep our fund inside home. He is an exporter. He has returned income in dollars. He can keep it at home or take it away. So we have to create a congenial atmosphere, an enabling environment for them to be induced to keep the money home and invest it.
Thank you.
And that is what we are working on. Thank you.
Yeah. There are a lot of follow-ups on that. Unfortunately, we don't have a lot of time. But I actually think that the sort of full liberalization of the capital account is a necessary step in order to get the confidence of investors, whether they're foreign investors or people representing indigenous capital. And that is a major obstacle. But maybe just shift gears real quickly to the private sector, the private equity space, and try and understand. So, how big is the space right now, Khalid? Since Brammer is really a leader in the space and a pioneer, how big should it be if many of the obstacles that we've discussed already did not exist, or these bottlenecks sort of look like they're going away? And what are the big areas that you think can scale, whether sector-wise or asset class-wise?
I mean, the obstacles are where they are, gradually they're going away, and this is a process that we are pragmatist enough to understand. There are tremendous opportunity for us to invest in Bangladesh. You know, we invested around $200 million in the last 6-7 years. Man, if we succeed, we can invest billions. Bangladesh needs many of us. We were just only one player as of today. So there is no question on the opportunity. And this reform that Mr. Qazi Amin is talking about, it is happening, but can we accelerate that? You know?
Sure.
I mean, no other
yeah.
country is going to sit idle because we are not doing anything.
Exactly.
So we have to continue our process. You know, in terms of opportunity in Bangladesh, I kind of see Bangladesh could be a mini China. You know, could be a manufacturing hub. You know, for the world. You know, if you look at, we have become the second largest garments manufacturer after China, and we also could do the same in other sectors. For example, maybe low-tech manufacturing. You know, we are also investor in a company that manufactures motorcycles in Bangladesh. We also invested in a company that manufactures white goods. So I think these are the next wave of manufacturing I see in Bangladesh. You know, not only for the domestic demand, but we also can export from Bangladesh to other countries. You know, so if I look at, so that manufacture is a big opportunity for us. You know, and also in terms of infrastructure, recently we have invested in a fiber optic network company. You know, that is the future digital Bangladesh. You know, that's the framework for their expansion. You know. So we are, as a fund, we are sector agnostic. You know, we invest wherever we find the right opportunity and the right people. You know, our fund is we do our own independent analysis. You know, we don't look for any collateral, we don't look for any state guarantee of our investment. But what we seek, that when we bring our money, we also want a seamless way to exit. Whatever return we make, our money could become zero, or our money could be 10 times. It's up to the risk we take. You know. So if our money becomes zero, we are not going to blame anybody. We are not going to blame the government or regulators. But if we make 10 times, 100 times, this is our return. So what we want from the regulators or that create that seamless way to bring the money as well as take the money out.
So this is actually maybe a good segue to our final 5 more minutes. Our final topic, which is really sort of the capital markets. You know, why has the listings or the stock of new listings on the stock market been relatively stagnant? And why hasn't the debt market really taken off? And I'm particularly focused on the external debt market for Bangladesh. But on the equity side, for instance, I mean, Grameenphone, when it did come to the market, it was really revolutionary as far as structure of the equity market, the liquidity in the market. It's a $7.5 billion company now, has probably the highest returns on invested capital of any telecom in its peer group in emerging markets. these type of success stories really become poster children for a market? Why haven't we seen more Grameen phones come to the market?
I mean, let me start with the good news. You know, recently, Dhaka Stock Exchange attracted a strategic investor. And this exchange was demutualized almost 3 years back, by the Parliamentary Act. And Shanghai Exchange has bought 25% stake. So it shows the international investors have confidence in our capital market, or at the opportunity that will bring how this market could become a larger market. Today, market cap is only 15% of our GDP. In any developed countries, the market cap could be 100% or few 100% of the GDP. So Shanghai Exchange saw the opportunity, being a large global exchange, they saw what Bangladesh capital market could be. So I think through this injection with a new strategic partner, and the regulators will see the light that, okay, capital market is not just a gambling place. I mean, frankly speaking, a lot of people think that way, but it's a source of capital. Just like an entrepreneur goes to the bank or go to a private equity fund, it could also go to capital market to raise money for its own expansion. I think that realization is coming. Maybe it's coming a bit slowly, but that's the growing pain that we have to go through. That's the teething pain, I guess. But I think I can see the light at the end of the tunnel. The capital market will become a source of capital for entrepreneurs, for companies, for expansion, and so in terms of, last year there was only 7 IPOs. Why? Frankly, I don't know the answer. Why not 20? Because there are at least 50 companies that queue.
Yes.
So it's up to the regulators, and they have to feel that they don't have to kind of control everything. Of course, every company should go through an extreme vetting, whether it's a good company or bad company, whether it's worth going public. But the amount of time it takes is quite mind-boggling. So I'll leave it up to the regulators, the government officials here, to think about it and give a deeper thought, that if good companies come, it's only good for the capital market, and it will vibrant. I mean, I was talking to the State Minister of Power. Even he is thinking that he would like to take this energy the government-owned energy company to public to raise more capital. Let the public share the wealth. Why not? So I'll just leave it at that.
Fantastic. Well, since we're at the end of our time allotment, I think we'll end and just give a round of applause, I think, to all of our panelists. Thank you very much.